Hello and welcome. It's 2 p.m. My name is Lungilele Makakwela. Welcome to Market View, the last episode this week. Disposed assets will now be taxed effective 1st July this year. The Director of Legal Operations at the Eswatini Revenue Service, Henry Sugati, says this comes with the Income Tax Order Amendments of 2023, adding that before a company is liquidated, the Commissioner General should be informed. This he said today, where ERS Commissioner General Brightwell Nkambule and his team unpacked the Income Tax Order Amendments of 2023. The Minister of Finance, in his budget speech this year in February, said raising sufficient revenue to support the provision of government services remains important for us as a country, and finding the delicate balance between raising sufficient revenue without stifling economic growth is what tax policy aims to achieve. The minister further said in the coming fiscal year, we will see the coming into effect of the Income Tax Order Amendment 2023. He said this legislation also brings changes that will improve effectiveness in revenue administration while also providing relief to businesses. We're going to be joined by business expert Zizwe Vilana to discuss these changes. Then later, we'll get into our financial segment with Sanele Sbia, who is our in-house economic. We'll look at the performance of exchange rate, commodities, and international markets. For now, let's go to business news. The amended Income Tax Order of 2023 is bringing a relief, especially for small and medium enterprises under the presumptive tax regime, especially those with a turnover of up to 50,000 malangeni. This was revealed by the Commissioner General of Eswatini Revenue Service, Brightwell Nkambule, during the launch of the amended tax order, which comes into effect on the 1st of July this year at the Eswatini Revenue Service headquarters at Zulwini.
With these amendments, we will see the reduction of the company income tax rate coming down from 27.5% down to 25%. Now, this is meant to put money back in the pockets of investors who are already in the country and to attract those who are not already here. And with the expansion in investments, we are confident that we will see the increase in the number of citizens who are in employment and ultimately improvement in the development of the economy. The other major part of the amendments was the introduction of a presumptive tax. The presumptive tax is a regime that focuses on making it easier to comply for small taxpayers, as well as reducing significant costs of compliance. So with this presumptive tax, we have basically two rates that will be applicable to them. Those that have businesses with turnover of less than 50,000 emalangeni will have 0% rate applicable to them. And those with turnover between 50,000 and 500,000 emalangeni, the rate will be 1.75%. And we as the ERS would like to commend the Ministry of Finance and other government structures for these amendments, because we believe that it will make it easier now for any business or any citizen in the country who's running a business. It will make it easy for them to comply, because the compliance obligations have been significantly removed or even almost eliminated.
Different business organs say they appreciate the efforts by the Eswatini Revenue Service, especially in simplifying the processes of paying tax.
No, sijabule kakhulu ngaloko singi-first speak lokho ukuthi lokungenani tikhalo temaswati setivakele nekwekuthi ke first speak ube ingcenye yakhe ERS nakalungisa lo mthetho nanaye kukhona la contributile kiko
kulo mthetho uyakhethela ukuthi ufuna kusebenzisa yiphi indlela le tawulungela wena twisane ukuthi kwangathi besingakhona organizer ngetinkundla ngetinkundla, because akusibo bonke bosomabhizinisi lebajoyinile ka Eswatini commercial amadoda bakhona ama street vendors lokhanje bathi maketela nje abanaki lutho.
There has also been a change in rates for withholding tax, where non-resident shareholders will see an increase from 12.5% to 15%. Non-resident tax on interest will increase from 10% to 15%, and branch increase will be from 12.5% to 15%. For Market View, Nelson Dlangamandla, Vuminkosi Nzinisa, Ezulwini.
In the month of March this year, the country recorded a trade surplus of 391.8 million emalangeni. This is contained in the recent economic development report by the Central Bank of Eswatini for the month of March and April this year.
The Central Bank of Eswatini states that in March this year, the country recorded a trade surplus of 391.8 million emalangeni compared to a deficit of 143.5 million emalangeni in the preceding month. Exports were up in the month, totaling 3.570 billion emalangeni compared to 3.360 billion emalangeni in February 2024, indicating a year-on-year increase of 2%. Imports decreased in the month of March, amounting to 3.179 billion emalangeni from 3.503 billion emalangeni in the previous month, an increase of 15.9% year-on-year. The seasonally adjusted trade balance for March 2024 was 171 million emalangeni, where seasonally adjusted exports amounted to 3.458 billion emalangeni, and seasonally adjusted imports were at 3.287 billion emalangeni. The central bank states that the overall imports increased in the first quarter of 2024, amounting to 9.415 billion emalangeni compared to 7.838 billion emalangeni for the same period in 2023. South Africa remains the country's major trading partner, with 62.9% of exports destined to South Africa's markets and 73.8% of imports originating from the same market. For Market View, Nelson Dlangamandla, Vuminkosi Nzinisa, Mbabane.
7 minutes after 2, let's quickly go for an ad break. Sabuya khona manje.
Eswatini National Petroleum Company proudly presents to you the Monday edition of Market View, where business news are reported and analyzed by a cast of experts and correspondents to deliver unrivaled facts and figures from the business world. Catch this edition every Monday at 2 p.m. brought to you by Eswatini National Petroleum Company.
Welcome back. Thank you for staying with us. You're still watching Market View. We continue with our program. Disposed assets will now be taxed effective 1st July this year. The Director of Legal Operations at the Eswatini Revenue Service, Henry Sugati, says this comes with the Income Tax Order Amendments of 2023, adding that before a company is liquidated, the Commissioner General should be informed.
The meaning of asset has been broadened in a way to include shares. So if you are disposing of your shares, we know that currently, if you dispose of shares, that profit, it's non-taxable. But with effect from the 1st of July, with all due respect, you'll have to pay tax if you got something from that. The same thing applies if you dispose of a farm or even your motor vehicle. It might happen that you bought the motor vehicle for 180,000, but you dispose of it for 300,000 for whatever reason. We'll just tax that portion. Just tax that portion, it's not too much. Well, tax rates, non-resident shareholders, is an increase from 12.5% to 15%. Non-resident tax on interest increased from 10% to 15%. Branch profits increased from 12.5% to 15%. I will just explain why we are talking of non-resident tax interest increase from 10% to 15%. You know, these interest rates, most of the time we have what we call double taxation agreements with foreign states. These are bilateral agreements where we agree on the percentage of tax you'll pay if you are a businessman from a certain country. Take, for instance, if you're from South Africa, you might find that our law states that it's 10% interest, but because we had negotiations with South Africa, so any company from South Africa will be taxed at 7%, or from Mauritius it will be taxed at 5%. So here, when we leave it at 10%, it didn't give us more latitude to negotiate. Hence, we've gone to 15%, but then it can come down to as little as even 3% or 5% or 7%, 9%, but it depends on the negotiation. So I don't think that will be a problem in any way. And you should note that in the past, we had a special rate for SACU member states, 12.5%. Luckily enough, almost all the members from SACU, we have double taxation agreements. Now the 12.5% is no longer needed. We don't need that. We are okay with SACU, so we should look at other jurisdictions which do not have double taxation agreements.
All right, so that was Henry Sugati from the ARS. Ashukuthi, disposed assets will now be taxed. To further this discussion, I'm joined by business expert, Mr. Zizwe Vilana. Mr. Vilana, thank you so much for I think these are good news, particularly for Bosoma business. You know, this amendment come with a lot of changes, which are a relief to local businesses. Ingabenje, what are the benefits for a foreign direct investment?
Thank you, Mtombeni Sivusele nababukeli ekhaya. Sibonga nelithuba to share with the public what we think of the revised amendments to the income tax order. Basically, what we see is, one, the reduction in corporate tax from the 27.5% to 25% is a positive signal from the government to foreign investors and domestic investors to saying Eswatini is committed towards reducing the cost of doing business in the country. You are aware, could see institutions like BOAIPA go around promoting foreign direct investment, and amongst the tools that they use is incentives, where they argue for reduction in corporate taxes as a means to encourage the private sector. So we see this reduction as encouraging private capital formation, allowing companies to be able to expand and reinvest more in the country, whilst also sending positive signals to new investors looking at setting up in Eswatini.
Okay, so is this also good news for SMEs, business
for the SMME, as you've noted from the statement by ERS, we see a threshold of 50,000 emalangeni for SMMEs where they pay 0% corporate taxes. This one speaks mostly to our bomagebet makaya in the informal trade, where now they are encouraged by this regime to saying, if you are turning below 50,000 emalangeni, you can formalize your business, register with government, we will not tax you. We have high levels of informality in the country, currently sitting at 70%, and we believe this new regime will go a long way towards encouraging that. Adding to that is the 1.75% presumptive tax, which is also part of the application for any companies going up to 500,000 emalangeni in turnover. This now encourages SMMEs, because if you look at the effective tax rate paid by large corporates, which will be 25%, against what the SMME will pay at 1.75%, there is a huge difference. Yes, we do agree it's at turnover, not at net as in the other, but still the effective tax rate that is paid by an SMME has been greatly reduced, and this we believe will also go a long way in reducing informality and encouraging, SMME development in the country.
Okay, so but how strenuous was it for SMME in the country before the amendments? For them.
It was very difficult. One of the things that MSMMEs face is they bear the brunt of compliance and regulation more than bigger companies. Bigger companies have dedicated teams, you'd have accountants, you have auditors, you have legal experts. SMMEs don't have access to those skills. So it becomes an added cost for them to provide audited accounts and go through the entire process of compliance. So this reduction where they now go through the system, submit their monthly returns, and they're able to be taxed based on what they submit, makes it very easy for them to pay taxes and comply, which also I think from an ERS perspective will go a long way in broadening the tax base.
Yeah. So trade, international trade, how is this job going to help COMESA and also the AfCFTA?
From a domestic perspective, I think one of the biggest challenges we face is the lack of export-ready companies in the country. So we believe any reduction in the cost of doing business and anything that encourages SMMEs to grow will allow us as a country to be able to take the next level of SMMEs to export readiness to allow us to tap into these new markets like the AfCFTA.
But why are we so behind? Why do you like export-ready companies?
I
Where's the
think
gap?
for us, the focus has always been predominantly FDI. I will give a simple example. The services that SETCO provides are predominantly geared to SMMEs and startups. An established company will not go to seek SETCO services. So it's usually the startups. But now if SETCO charges for those services, then the ecosystem that supports entrepreneurship in the country is lacking because we do not have the support systems that allow a startup to grow.
Yeah. So the minister, when he was tabling his budget, he said it's important to raise sufficient revenue to support the provision of government services. Why is that important?
I think more than anything, we need resources, we need revenue as government. If you look at the current budget, from the national budget, you'll realize that a bulk of it is around consumptive expenditure, and a small component goes to what we call the development component of the budget. And this is the money that is used by government for the many programs that exist within government. And as we sit here today, we're talking more than 80% of our national budget going towards consumption, leaving very little money towards programs. Hence, you'll see a lot of institutions. I'll give an example of the SME unit. This is the unit dedicated to development of SMMEs at a national level. But if you go to the ministry, there's only 5 officers, stretched very thinly, limited resources for them to undertake and fulfill their mandate. So such resources would definitely go a long way in scaling government's capacity to support private sector.
Private sector. Do you also think it's a benefit for local businesses as well?
It is definitely a benefit on 2 parts. I mean, on the one end, they're seeing a reduction in taxes, but we need to balance that with other revenue streams, because at the end of the day, government revenue will be reduced by reductions in corporate taxes. So we see increases in other areas like your withholding taxes for expatriates coming to do services in the country. We see increases in capital gains taxes to try and balance the revenue base of the country. So at the end of the day, it spells it augurs well for the economy and for the private sector in the country.
So I want you to give us an estimation, small business, particularly those that have turnover that is less than 500,000 a year. We'll see, but that comes about malini in income tax after these amendments.
Nothing abegisa nje ukuthi ubowenta 100,000 a net profit a year, and you are supposed to pay 27.5% of that. That's 27,500 emalangeni.
Yeah.
What net? Now let's assume that the 100,000 net profit for that SMME was based on a turnover of 500,000 emalangeni, for argument's sake. You are now going to pay 1.75% of the 500,000, not 25% of the 100,000. So if you look at that figure, it's more than greatly reduced by more than 30% of the actual. You'll pay about 30% of what you would have paid prior.
So
but I still say, obviously, we still need to get to the effective tax rate, because this is at gross. But it is a great relief for SMMEs, definitely. And it's one thing we've been pleading for from the Minister of Finance, to say we need a tiered tax structure that recognizes the differences between large corporates and SMMEs, and recognizes that they have different capacities and are burdened differently by compliance.
All right, thank you so much. It is a relief for businesses. Mr. Zizwe, for that insight. Let's go to the second clip. Solo Nakona Sibuga, Commissioner General of the ERS, with his team unpacking the income tax amendments 2023.
Payment date on or before 15th day of the month. You'll notice that currently we're talking about payment within 15 days. But here it was an administrative burden of some sort, because 15 days is not the same to all of us. So the policymaker decided to put it on the 15th of the following month. You collect money on the 17th of this month. By the 15th of next month, you should have remitted. That will help us administratively to deliver, because ERS, is here to collect money to help the country, to help you, to help everyone. So we shouldn't find ourselves having problems collecting that. We're collecting on the 17th, on the 19th, 21st. Now we know that by the 15th of the following month we would have collected.
Right, Sibonge Henry Sukati Loyo, Lungu Loboyega ARS, speaking at the amendment of the Income Tax Amendment 2023, just giving Anpekela Dintatseli Ngawo Lomte. For this conference, praise our West Bege, Mr. Sbiya.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Welcome back, Sarobugela, Luhlelo lakho Market View. Thank you for staying with us. Silesikhathi sita khulumisana na Mr. Sanele Sbiya, Lungu economist lapha ekhaya eSwatini. Sifuna ukubuka ukuthi ngabe imakethe iperforma kanjani this Thursday afternoon. Good afternoon, Mr. Sbiya. Thank you for joining us lo mhla. Kuva nje ukuthi ngabe ime kanjani imakethe lamuhla. I saw ukuthi the pound seemed to be steady this afternoon, a day after British Prime Minister Rishi Sunak called a national election and data that showed inflation did not slow as much as expected in April. Ngabe currency's exchange rate ime kanjani this afternoon?
Thank you, and good afternoon to the viewer. So what we are seeing there in terms of currencies is, comparatively against the Lilangeni, we are seeing a bit of losses. Foreign currencies are becoming a bit resilient. However, we haven't lost much in terms of the ground against these currencies. So most of that we attributed to what is currently going on. With some trade rebounding into Wall Street in the past couple of days. We've also seen London doing better. And all of those dynamics are the ones that are contributing to what we are seeing in terms of the currencies. So we have lost a few points against the dollar, and we've lost a few points against the pound, against the euro, and we've lost a few points again against the Japanese yen. So that's largely due to what we've already spoken about, the issues to do with rebounding of trade in the global north, and also what we are seeing with the price of gold taking a dip in the past few days.
Yeah, speaking of gold, last I checked, namhlanje it was trading at over 2,000. Ngabe liperforma kanjani this afternoon?
Thank you, Lulu. Yeah, it's still above 2,000 and still in the 2,300 region per ounce, $2,300 region per ounce. So that is, but it's showing signs of a decline. But what we are seeing shoring it up, it's still performing relatively well compared to what one would expect with, life being breathed into Wall Street. But because, life goes back into Wall Street, but still under a lot of uncertainty regarding the interest rate story. So that is why we are seeing gold holding steady there and holding stronger over the past few days. But it is now showing signs of a downward trend, with the anticipation that markets are soon going to shift and, start seeing those interest rates declines, but there's still a lot of that uncertainty. But when we go again to Brent crude, we will see that Brent crude as well has taken somewhat of an increase, but still within that $82 mark. Again, those are the signs of weakening demand. When we forecast and we see that we in the current, if the interest rates stay higher for longer, then demand might be a bit diminished. People are not going to travel as much, and we are seeing supply chains trying to stabilize after the Russia-Ukraine war, and we've seen that in the Middle East, things seems to be it's no longer pandemic now, but it's more endemic within the Gaza Strip and within the Israel type of setup. So it's not spilling over into the region. So that's why we are seeing also steadying up at that region.
All Alright, mhlawumbe singabuka international markets, Mr. CBI saw umbiko ukuthi the German Chamber of Commerce and Industry at Germany ithi the long-awaited economic recovery is not materializing and the Eurozone largest economy will only stagnate this year. Ngabe nasibuka the US markets, the Asian markets, tinombolo tipufamba kanjani lomuhla?
Thank you, Lulu. Maybe let's start with the US market. So what we are seeing in the US is we are seeing markets really just trying to move and but still a bit lackluster. So that we can attribute a lot of that movement that we are seeing to, the Federal Reserve Bank minutes that came out yesterday. So what those minutes showed was, the Federal Reserve Bank is still very worried about inflation. They're not seeing inflation really coming back to the region of 2% anytime soon, and such that now the market has to recalibrate their expectations of an interest rate cut. So now we are seeing, the Federal Reserve Bank, when you read those minutes, they are really saying, we are going to stay in this higher for longer type of situation. They are not seeing any shortcuts to interest rate cuts. So that's why we are seeing the Wall Street, they're taking a dip and a decline. Now we are seeing even the Nasdaq failing and the Dow Jones failing to even actually just now sustain the momentum that we expected with NVIDIA when, you multiply your profit 7 times as one of those stocks trading in the market. But yeah, the jitters that inflation story and the interest rate expectations sent into the market really just sent Wall Street down. And then you go to Europe. When we see Europe, what we are seeing there is, again, the numbers are a bit promising with the Eurozone overall, the greater Eurozone coming into state that, we are going to still, there's still that talk about the interest rate cut in June. And with Christine Lagarde yesterday coming out, when you follow that story, you will see that she, comparatively, as you compare to the US, the Feds are, the European Central Bank is actually more optimistic that inflation is under control. You've said the story about Germany, but what we are seeing the numbers in Germany doing now is the numbers are coming up to a stagnation story and shifting from a contraction story. That is why we are seeing the DAX there gaining marginally. But when you're looking at the greater overall schema of things, we are going to start seeing interest rates declining in the Eurozone region. And again, in London, we are expecting the same. But markets are now pricing in the fact that we have an election. Elections have a tendency of pointing direction on how the markets are going to go. And then also, the pound sterling is getting a bit stronger, so you will see it that has an impact on the FTSE 100. And then again, you go to Asia. In the Asia region, what we are seeing there is, there is a lot of mixed signals there, with Japan just coming up a bit better. And, we are still seeing those impacts of that bond buyback in Japan. So with the yen also getting a bit of strength against the Lilangen and quite a number of other currencies, that is what we are seeing happening there. But otherwise, the effects of Wall Street have actually gone into Hong Kong and Beijing. So you can see that the Hang Seng Index and the Shanghai Composite have actually both dipped, given what has happened in America, in Wall Street. So that's what we are seeing happening there. But, the microdynamics in Japan are making things to really shift up. And, Japan doesn't seem to be reacting much to what Wall Street is saying. And then coming closer to home, to South Africa, what we are seeing happen there is, the Johannesburg Stock Exchange is rallying almost closer to the 80,000 mark that we saw it hit just a couple of weeks ago. But right now, what we are seeing is markets are slowly beginning to slow down, because we are heading into an election, sometime next week, and that is going to be a huge decider. And, the demand that was coming in through the electoral process will soon die down next week. So markets are already now starting to be a bit cautious about that. But the election has actually insulated against the bad news coming out of the Federal Reserve Bank. And we are hopeful that load shedding will stay as it was during the election cycle. And we're also seeing that when you come closer to home, to the Eswatini Stock Exchange, we still see the Eswatini Stock Exchange remaining on those 479.62 region and showing not much signs of increase as well. You do expect such that, after earnings season, we tend to see activity dissipate within the stock exchange. Thank you.
All right, thank you so much, Mr. Sibiya. Unfortunately, that is our last segment of the program. Thank you for joining us, Lomhlaimini. Thank you, Mr. Sibiya, for that analysis of our markets, Lomhlaimini. Have a lovely day. We'll see you next week, Monday at exactly 2 p.m. Have a safe weekend.